2024 has been off to a hot start in the markets. A good performance in the energy sector helped to lift Bay Street to a positive close on Friday, while Toronto's S&P TSX gained 188 points. In New York, the Dow Jones Industrial Average added 90.99 points, and the Nasdaq rose 183 points. And similar trends are happening in Asia in both Japan and Hong Kong. Joining us now to unpack the roaring start to 2024 is Brendan Caldwell, Director at Caldwell Securities Limited. Caldwell, welcome to the show as I'm stumbling there at the end.
That's all right, Julie. It's lovely to hear you.
Before we talk about the markets today, last week a Canadian icon passed away. Let's talk about Brian Mulroney, what he meant to Canada, and what he created for our country when he was our Prime Minister.
We created rather a lot and aspired to do even more. If he'd been able to get Charlottetown or Meech Lake across the goal line, I think he would have gone down as one of the two or three greatest prime ministers in our country. If he was able to unify that and fix the damage that the repatriation of the Constitution has done and indeed continues to do with a notwithstanding clause and all that, and the fracturing of Canada, which I think the Constitution only exacerbated. But what he did do was free trade, which for 30, 40 years now has done wonderful things for Canada, whatever people may say. It was huge when our energy sector was the primary source of oil and gas for America. It helped that to prosper, as well as many other sectors. So he did a lot, and while he left office very unpopular because of the bringing of the GST, that was the single biggest factor in balancing our national books, so that we were actually running surpluses during the Liberal government that followed, and God bless him, Paul Martin took all the credit for it. But it was really Mulroney and Wilson and his team that did a lot to get Canada in the good shape at which we were when we began the century anyway.
Now, moving on, let's talk about the S&P and Nasdaq closed at record highs on Friday, March 1st. Is there anything significant that we should be looking for?
Well, markets don't tend to go from record highs to a bear market. They tend to go sideways before they go down. So as long as it keeps going up, it's probably going to keep going up, or at worst go sideways. Originally, this market rally was based on the idea that interest rates, particularly the central bank interest rates, would be coming down. But how do you lower interest rates when the stock market's hitting all-time highs and unemployment is very low and housing prices remain resilient? All of these things do not argue for a lower interest rates, and yet the markets keep going higher. What I think is neat, as the technical investment term, neat, that you pointed out a moment ago, was that it's energy and different sectors that are driving the market, whereas in 2023, it was the so-called Magnificent Seven, NVIDIA and the rest. Although NVIDIA is continuing to be very strong, other sectors now are coming along. Some of the dividend-paying stocks have been doing well, and our U.S. dividend strategy has actually been perked up considerably compared to the pure tech stocks.
And crypto is at a record high as well. What do you make of this?
Well, it's been a long time since the Mulroneys of the world have tried to balance national budgets. We're a million miles from that. So I think crypto being at these prices is, at least in part, an argument against fiat currency, government-issued paper money that they can print at a whim. There is a finite amount of Bitcoin in the world, and there will always be a finite amount of Bitcoin in the world, as well as the other cryptocurrencies, so that it's a vote where gold used to be the flip side, and it's still, gold's doing well, but it's not doing crypto well. I think to at least in the last few number of years, cryptocurrencies have been the opposite of fiat currencies, in that they've investors have seen a value in a type of currency that people can't print infinite amounts of just because it's politically expedient.
Now, lastly, there are two wars that don't look like they have an end yet. The markets, real estate, are at all-time highs. What is the contributing factor? We have 30 seconds.
Market doesn't care about world affairs. It doesn't care about politics. If you were, think about 9/11, the market was higher by the end of 2001 than it was the day before 9/11 struck. Once the market has taken on that there's a war in Ukraine and a war in Israel, it just doesn't care. We may care as individuals, we may care as countries, and God willing, there will be peace in both those nations and a good and lasting peace. But the markets are indifferent once they've taken a risk or a political situation on board. They think about other things like interest rates.
Brendan, thank you so much for joining us today on Forum Daily.
Thank you, Julie.